I just wanted to do a quick video on what's going on with ULTY. Uh, and as you guys know, it's down a bit the last couple of days. And in this video, I'll explain why exactly and what you can do maybe to counteract that NAV erosion that's going on. Stick around to the end of this video, and I'll let you know how to do that. But if you could, go down there and hit the like button, the subscribe button, and maybe leave a comment in the meanwhile. And tell me how you're doing. But as you guys know, ULTY is the YieldMax Ultra Options Income Strategy ETF. It is a covered call and protected put ETF on extremely premium rich, volatile stocks. The likes of, what is it, AppLovin, PLTR, AMAT, think Target's in there, UPS, bunch of different, RGTI, from what I remember. But the last couple days haven't been pretty in the fun. Let's go to the 10-day. The fun's been dropping for the last couple of days. I mean, it was at a high of, I remember a couple weeks ago, of like 630. And even last week, it was in the sixes. Now, this has happened right here. Overnight, the fund has dropped to 459. Let's zoom in on that. Down from around, what was it, 577. It's kind of stabilized now, but goddamn, what is that, 20% drop. All the distributions for the next, what, 20 weeks would make up for that, but still, who's got 20 weeks to wait around? And the reason why this happened was the market had like a really, really terrible day yesterday. Let's see, AFRM down by about 5%. What the hell is this? AMAT down a point. AppLovin down by 5%. ASTS down. Oh God, BitMine, which is Bitcoin mining, of course, down. What is that? Oh, over 10%. What is that? 9.2%. Sorry. Webull, which is one of my beloved stocks, down by a buck, so almost 7%. Coin down, Crudo down, all the way down, 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 down. The only thing that was not down actually was Target. So Target stores were up by 41 cents. But like even the likes of, where is it? PLTR is like just going into the floor after being at a high of like 190 last week, down to 152. Now, the fund does sell protective puts just in case this kind of, what's his name, scenario would happen. The problem is they usually sell protected puts, let's say if, it buys protected puts. If it buys a protected put and the price is standing right now at 190, it might buy a protected put that's sitting down around, let's say, 175, somewhere around there. And anything to the downside from here is going to be some sort of profit. But if it starts thinking, this is the bottom over here, over at 170, and it buys back that protected put, closes the position, then it made about 500, whatever, 5 points, $500 worth of profit. But then the stock tanks and goes, to the downside. Another, what is this? 18 points and you had no protected put, or you set the protected put even lower, or created the protected put for that matter in a time of volatility, so you had to pay more premium for that actual protected put. Meanwhile, your covered call, which or collar for that matter, if you place it up here, let's say where your previous one was, then you're getting way less price and premium for this collar or covered call. You're not making as much money, and your underlying is going into the toilet. So this is basically, in a nutshell, why this thing is down, because everything else was down massively. And I highly doubt that the protected puts actually saved much capital from what was going on in the underlying and made the money. Now, the fund is, I won't call it crashing, because it's still obviously meant to pay out a dividend, and the purpose of this whole fund is some sort of income. But I thought of a creative way to actually help myself and maybe help you guys, uh, so that even if it is crashing, you might not be in such a hole, let's call it. So my idea is this. How can we exactly, where is ULTY, the actual ticker symbol? Right here. How can we take advantage of times when they're relatively stable, and how can we prepare for times when they're downright scary? We can do this by selling a covered call against the actual underlying. So, example, let's say you own 100 shares. I bought 100 shares this morning, let's say, at 570. I can then sell some sort of protection here in a covered call at the 5 strike price, collect my premium of 70 cents, and then if the stock goes down to, let's say, $5, it will be called away, but I will still have my premium, which means that I will not have lost anything necessarily. Now, you will still be able to collect dividends within ULTY while you're holding on to this option. If I'll go into that in a second, actually, if the options buyer does not choose to exercise it, but most likely he won't, because there's not much premium here. The strike price, it's a gamble. It's definitely a gamble, but it would be interesting to see what would happen from this kind of strategy. So, for example, you could actually buy 100 shares and put on a strike price of $4, and that would give you even more protection to the downside. Now, unfortunately, ULTY only has options every 30 days, monthly. They do not offer weekly options, so this strategy is somewhat viable, but I need to think about it. I'm currently well short of the 100 shares I would need to try this out, and actually, I'm not willing to maybe buy any more shares right now. I'm just letting it drip. So let's see. But if you look into the 58 days, there is actually no premium on this past the intrinsic. Oh, there is a little bit, it says. Ah, because it's dropped overnight. That's right. Because right now we're trading at 558. So it does claim there's a bit of intrinsic, but this price will go down, of course. So if we just leave it at that price, there is no intrinsic, there's no extrinsic here. There's only intrinsic value. So this would be worth the 570-ish of the actual underlying. It would be really interesting to see if they would, they would pay out, or whether the option buyer would exercise the call. Uh, Can somebody try this strategy out and tell me what happens? I mean, it's an interesting hedge, if anything. Maybe I'll do it. I'll get back to you guys. I mean, the shares aren't that expensive. I need what? I need 38 more shares at, what is it? 558. 558. Okay, I need $200. That's fine. I'm not going to worry about that. Anyway, guys, somebody try this idea out. Tell me what happens. I might try this idea out. I'll tell you what happens. And yeah, thanks for joining me. And I hope you enjoyed the video. Like and subscribe. And I will see you guys later. Cheers.